All right, we are back live once again. Thank you for tuning in to the end of day report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the most powerful post wave price trigger reports on the planet. The only place where you can put the power of the algos into your favor, the only place where you can come and learn exactly what the central banks are up to before they do it. So, first and foremost, we had a very interesting day. For those of you that missed this morning's broadcast, I highly encourage you to go and listen to it. It was an epic broadcast. I was not even prepared to do. Didn't even know that I was going to do that broadcast. I do not have scripts. I do not pre-prepare before I go on the air. Everything is coming right from the chest. It's coming right from the heart, coming straight off the dome, coming off the lobes, off the brain. All right. And it's better that way. That's just how I operate. And we went there. We went in. We talked about some things. All right. So you're going to want to go and check that out if you haven't done so already. What up to my people in the live? What up, IT, Rick, Mick? All right, Mick, I see what you're saying. I saw you over there, my man. I got you. What up, R Good? What up, Red? All right, I got you, man. I got you, okay? Here we go. What up, Kyle? All right, we're going to get right into it. I'm taking it, my man. Mick got to go, so let me hook you up real quick. All right, here's your Australian dollar chart real quick. All right, looking at the Aussie. As you can see here, the market is having problems at the bottom of the Kumo cloud. It is acting as that resistance that I warned you about. The interesting thing, though, about the algo chart here is that we are neither bullish nor bearish right now. We are consolidated here at this resistance point. We're coming off the primary crash alert right here, except for the market has not crashed. Now we're 3 bars in. It usually takes 3 to 5 bars to see this manifested. If it does not manifest, once we get to that completion of that 5th bar, then this right here becomes invalidated, okay? So right now, what we got is a situation where we're starting to see weakness. This is the trend line right now that is acting as resistance, followed by the Kumo cloud, and you see that they're coming together now. Trend line, Kumo cloud. That acts as a very powerful, strong resistance. And even though the momentum was up, it's up, but it's flat. We're not getting that oomph behind it. Also, if you take a look here, it looked like we were going to have the beginning stage of a bullish weekly trend momentum, but it came off. Same thing here. It looked like we were going to have the beginning stages of a bearish weekly trend momentum, and then that came off. So the bullish momentum in the market gave up, and so did the bearish momentum in the market. Buyers and sellers have both thrown their hands up and given up. So where do we go from here? That is the real good question. This is the Australian dollar, the AUD/USD. All right, this is the Australian dollar, better known as the Aussie. All right, and that was coming off of request. So I figured I will hook my man up real quick so you can have the chart. All right. Yep, AUD/USD. All right, so there's some things we need to do. We need to do some housekeeping stuff real quick, and then we'll get back into these charts. All right. Okay. Oh, you're welcome, Oscar. You're welcome, Mick. All right. So first and foremost, you will notice some slight changes on the reports this evening, and the reason for that, I've been taking feedback from everyone, seeing what is helping, what's helpful, what's not helpful, and finding a happy medium. All right. So you will notice that the weekly triggers have been updated and adjusted. Those weekly triggers will remain on the report every day. All right. They won't vanish like your daily triggers. The daily triggers need to remain the way they are. So regardless of what the analysis is, regardless of what the algorithms are saying to you on the talking report, if there is no daily trigger available, that is also telling you something. And you need to take that to heart. All right. It's saying you shouldn't, even though it's looking a certain way, do not get involved yet because the market needs to prove itself. So instead, it's going to refer you to the weekly trigger. Understand? All right. So that's what that is. Your weekly triggers is your trend following mechanism. All right. We've shifted the trend following mechanism to the weekly triggers. Okay. Likewise, we have smoothed out the loaded triggers. We rework some things, changed some coding there, and we turned up the trend following mechanism and turned down some of the loaded. I think it was a little too loaded, so we had to smooth that out. So I looked at everything, over the past several days and over the weekend, and I ran a few tests, and I decided that that would be the best course of action moving forward. So you will find the loaded triggers a lot smoother now. All right. Yes, you may see more zeros telling you that you don't want to be involved with that right now. The system is favoring the weekly trigger. Always look at that momentum trigger. Look at that intraday price inflection point, which is the momentum trigger. Look at that. All right. You study that first. That's going to tell you where the money flow is in the market at any given time, 100% of the time. All right. That's going to tell you where the market is favored, what's being favored. All right. And what to look for. All right. So we'll do some more live things with that too. All right. Like maybe what I'll do is I'll incorporate some of the stuff in like maybe a morning video or something where we're specifically looking at a couple of them. Probably do something like that. All right. Thank you. Thanks, Kev. I appreciate that. All right. So one thing that we talked about this morning, we were talking about how to understand the bubble economy. There was a climax that was all leading to, and that's the nationalization of everything. We're living in the age now of the nationalization of everything. People scratch their heads at times to try to wrap their head around this. So let me help you. All right. This is some house cleaning. We gotta clear this up so we can move on. All right. So we're in an age now where everything is being nationalized. All right. The federal government is taking over industry now. They're literally taking over industry. They're basically buying countries, but they're not saying they're buying companies. They're saying we're bailing out companies. Well, what do you call it when a company is failing or has failed altogether, and then the government comes and quote unquote bails it out? And then they come up with terms such as too big to fail. There's no such thing. If a company is being ran poorly and being ran into the ground because of greedy executives, all right, and because of misappropriation of funds, because of embezzlement, because of fraud, because of malfeasance, manipulation, all right, that company deserves to go out of business. So you may be asking yourself, why is it that the government is bailing out Fortune 500 companies so that their executives can get higher bonuses, but the mom and pops are not being bought out? They're not being subsidized by the government. They're not being nationalized. They're being allowed to go bankrupt and allowed to go belly up. Okay, so the CNN answer that you're going to get on the mainstream media is you're going to get, well, because these Fortune 500 companies employ so many more people and it will be a detriment to the economy. They're too big to fail. That's what they're telling you. So you say, oh, okay, that makes sense, right? No, that's not what's going on. What's going on is these large corporations are being subsidized, being nationalized by the federal government, being taken over per se by the federal government. Okay, that all that bailout money comes with strings attached. Don't get it twisted. So the reason they're doing is because a small mom and pop ain't, that don't mean nothing to the feds. They ain't looking at that's small money. That's guppy money to them. They want the big money. And where's the big money? It's with the big corporations. All right. That's what's happening. Now I'm gonna give you something else. All right. Give me 1 second. Gotta adjust my headset here. All right. So they don't want to take over the little teeny mom and pop operation. That's not going to make them no money, and that's not going to expand their power base. Okay. But a large company like a Walmart would, because Walmart has thousands of stores and employs millions of people. So that would be great. All right. That would give them a foothold. Worst case scenario, they could turn all those Walmarts into military bases. Okay. So at the end of the day, it's about what is going to extend the power base and what is going to make the most money for those in power. Okay. That's the issue. That is the issue. So the mom and pops are going to be going belly up and the big corporations are going to get nationalized. But we have a problem, people. We have a problem, a big problem that's not being talked about. It's a big problem. The word government is being thrown around, but it is a nebulous term because we're not really talking about the government. We're talking about a private company. A private company is doing this. You see, our US Treasury does not create money nor print money. That responsibility has been left up to the Federal Reserve. The Federal Reserve is not federal, it is a private entity. Okay? It is not elected, it is above the government. It is a small cabal in comparison to a government. All right, the Federal Reserve is what it named itself, but it is not the government. It is not made up of government officials. It is made up of private entities, most of which is being kept secret from the public. Then they created their central banks. These central banks operate under the auspices of the Federal Reserve Bank. Okay? The Federal Reserve is the giant octopus. The Federal Reserve is the one that is so-called printing the money. The Federal Reserve is the one doing all the bailouts. That's where the money's coming from. The Federal Reserve controls the money in every aspect, shape, and form. I repeat, the Federal Reserve is doing the bailing out. Every time the Federal Reserve prints $1, it has interest attached to it. Every dollar that is printed has interest already associated with it. That's why the US dollar is really a debt item. Okay? So, with that being stated, the Fed is the one that is buying everything. Your stimulus checks are really not coming from the Department of Treasury, they're coming from the Federal Reserve. The Federal Reserve, quote unquote, lends the money to the Treasury. The Treasury doesn't have any money. The Treasury is broke. The Fed has all the money. Okay? Now, here's the situation. Unfortunately, not only does the Federal Reserve have all of the money and all of the power, but they literally control the military as well. Not just the military, but they control the Department of Defense. They control the Treasury. They control everything. Okay? A private group of individuals own and control it all. Now you have to ask yourself a question. If the Department of Treasury doesn't print any money and it has to go to the Federal Reserve to receive funds, to receive funding, the next question that you're going to get is, where does the money come from that the Treasury is able to lend? Where's the Federal Reserve getting all this money? All these trillions and trillions of dollars that have been thrown all around the globe. Where's this money coming from? Where are the central banks getting their money? Where's the Fed getting its money? That's the real question. And here's the real answer. They don't have any money either. Technically speaking, they're also broke. Money, you see, doesn't exist. There's no such thing as money. It's all an illusion. It's all zeros and ones on a computer, on a server. It's whatever they say it is. They determine and dictate and control everything through these servers with zeros and ones. Okay? It is a computer network, and that's it. All right? Whenever you hear government spending and deficits and stuff like that, when you watch it on the mainstream media and stuff like that, they always show you a printing press in the background printing money. That's just for your benefit. That doesn't exist either. Not the way you think. It's all zeros and ones, people. It's all zeros and ones. Period. That's what it is. So, with that being said, Fed has no money either. All they have is zeros and ones that says that they have the money. So, because they control the mechanism that distributes this ledger of zeros and ones, okay, it's what it is. All right. It's not money. There's no money. It's just debt. Correct. It's just debt. And because of that, they get to control the natural resources of the nations. All right. It's all bankers. Everything is banker driven. That's why the situation exists the way it exists. All right. Now, take this. Take this. Oh, that's a good question. Imagine if they had to print all that stimulus money. How long would that take exactly? And then how many tractor trailer trucks would they have to lease and rent in order to deliver it to all the different places it's going? It's ridiculous. That's why it's all zeros and ones, people. It's not paper money. It's zeros and ones. They push a button and automatically your account will say you have this much money in it or you have that much money in it. It's just zeros and ones. We need $20 billion to bail out this, this, and that. Okay, let me push the button. Let me type it in for you. Okay, I just pushed the button. You're good to go. How do you think that they've been able to strangle and choke nations out like they do Venezuela and Argentina? You always hear about them in the news, and Greece and all these places. How do you think that happens? Okay, because what they do is they take and push the buttons on the computer that says that you are cut off. You're cut off from the mainframe. So now you can't operate. If you're cut off from the mainframe, you can't push the buttons on your terminal to make sure that everyone gets paid and your money is flowing. That's how they cut off nations. All right, they cut them off. How do you think an embargo works? Same thing. They say, okay, Iran, We're going to put an embargo on you. So now we're going to make it so that you can't use the mainframe. You can't use the network. You're locked out of the network. So when you turn your computer on and try to access anything there, you won't be able to. If you try to move money from this account to that account, the computer system won't let you. You've been locked out. We have embargoes and sanctions and any other term that they want to term it and explain it. That's what it is. They are cut off from the mainframe. They're cut off from the computer database. They don't have access. Who controls the access? The bank controls the access, and they use the government to puppet their policies. Okay, that's what it is. No, Trump is not part of it. People want to know, is Trump a part of it? No, he's not. He hasn't had no interest in the central banks and the Federal Reserve. The president is a spokesperson. He is the face of the government. That's all the president is. He's a face. Okay, that's all it is. All right, he is the face. He doesn't have any power in and of himself. He's not a king. He's a president. All right. It's all digital. It's all digital. It doesn't mean anything. All right. What you see on this end is what they want you to see. What you don't understand is that it's all zeros and ones. How do you think they were able to erase millions of trades on 9/11? Do you think they had what? Did they have to run an ad in the local paper hiring computer people to come data entry specialists? We need to hire a couple of thousand so you can come and you can help us erase all these orders, and so you can help us sort out all the transactions and help us. No, none of that was necessary. All they had to do was log into the computer and click the delete button, and automatically it does it for the entire system. The entire system is connected, people. The exchanges all over the world are connected to the Federal Reserve Central Database. That's why it's called a central bank, because the bank sits in the center of all the other mainframes, all the computers, all of the terminals. They're all connected to the central bank, the brain. All right, the brain, i.e., the beast, the digital beast system, the big supercomputer that controls everything. And they've been slowly connecting everything to this mainframe. That's why the governments of the world have been tripping all over themselves to come up with a digital aspect of their currency. The currencies are already digital. That's double speak. Oh, we're going to come up with our own digital dollar. The dollar's already a digital mechanism. What are you talking about? You're talking out of your neck. No, they're confusing you. They're speaking in a language that you don't understand. When they say we're digitizing the dollar, what they're trying to tell you is they are now going to associate the aspect of the petrodollar with the mainframe terminals, making it 100% digital. Right now, all currencies, all monies are digital, but they're not 100% digital. Once it goes 100% digital, there will be no paper, folks. They will be doing away with paper money and coinage for good. It will no longer exist. That's what they mean when they say they're making a digital dollar. The dollar's already digital. The Australian dollar, the Canadian dollar, the dollar yen, all of that stuff. Yen, francs, Deutschmarks, whatever you want to call it, it's all digital. So don't be misled when they say we're going to digitize, we want to make our own, digital thing. What they're talking about is they want to translate the currency as you know it to be. They want to cryptotize it. They're going to turn it into a crypto and put it on a blockchain, the blockchain. In other words, everything that you know as the electronic world that exists today, they're going to reshape it, reshape the landscape of it all, and put it under a Federal Reserve super blockchain. All right? Everything. Why do you think they've been slowly, incrementally introducing you to the Internet of Things and how everything's becoming smart? Smart phone, smart TV, smart car, smart house. All right, the word smart. It's not smart. All right, your phone does not have an intellectual capacity. It doesn't have a soul. It's not capable of authentic human emotion and thought. Your phone didn't just wake up one day and say, you know what, I just realized that I exist and I have personhood and I'm no longer your slave. I'm leaving. I'm leaving your pocket. I'm leaving your dresser. I'm leaving the table. I'm getting down off this table and I'm going to go out and I'm going to get me a job and I'm going to get me a career and I'm going to get married and have telephone babies and make a life for myself. I no longer work for you. Don't touch me. But you're ringing. That's an important call I'm expecting. No, it's not. It's not. It's not for you. Okay. Don't touch me. Get your hands off of me. You're violating my personal space. It's a phone. It's a cell phone. And by the way, we're not cell phones anymore. That is a derogatory, racist thing to call me. I am not a smartphone. I am not a phone. I am a telephonic internet device. You will put some respect on my name when you talk to me. I am no longer a cell phone. I am a telephonic, introspective internet device. All right? That's not what we got going on here, folks. When they say smart phone, smart house, smart car, smart refrigerator, they're talking about connecting it to the hive, to the Borg, to the new federal blockchain. And then they're going to connect other blockchains to it. So it will be an international, transatlantic, linked. Everything will be linked up. That's what the 5G is for. 5G is the main purpose for that is to run the new central bank blockchain system. Okay? This is what's happening. Now we got to deal with something else. Okay, so you know how it's been poo-pooed on the mainstream media, the connection with 5G and COVID-19 and saying it's fake news and all this other stuff, right? This is what they care about you, all right? This is the powers that be basically giving you the finger and saying now what you're going to do about it. During a segment on Bloomberg this evening, they were showing, showing how China's getting back to work and business. Why did it show the workers in the hazmat suits from head to toe? They in hazmat gear, right? They masked up, gloved up, visors, the whole hazmat joint, right? People coming up under these tents, right? Under these things. And guess what the tents had on? The tent said 5G. They had these orange things that said 5G on it, and here they are doing COVID-19 work under the umbrella of the 5G. I kid you not. I kid you not. That was on a segment of Bloomberg this evening. It was live. They put the connection right in your face and say, yeah, now what? Yeah, it's true. Now what? They put it right in your face and everybody missed it. I haven't seen one person talk about it yet. No one's dealing with it. They're not dealing with that. They just thumbed their nose up at you and said, what now? All right. Now, got to deal with the elephant in the room because you guys will not let me not deal with it. So let's deal with it. All right. I've been trying to describe to you guys the difference between truth and facts. Not all facts necessarily equal truth. So for this particular exercise, we're going to go into the markets again. And this time we're going to pull up a different chart. Yes, ladies and gentlemen, it is time for us to deal with the crude oil situation that went on today. Did I or did I not tell you to get thee out of the May contract and to start trading the June contract? Did I not say that? I told you that last week. I said you got 5 days left. The May contract is gone. Your broker should have already rolled you over to the June contract. That's the new front month. Get out of the May contract. What else did I tell you? I said, have you noticed how it's been moving weird? It's been acting weird. That's not a good thing. I said, get out of this and go to the May contract. Now, this is what you probably missed. And we're going to get into the nuts and the bolts and the meat of what happened, because you're going to need to know the facts and you're going to need to know the truth. Then I'm going to show you how the mainstream media manipulated the facts and avoided giving you the truth, because the truth is absolutely gangster. The truth is not what you may think that it is. When I give it to you, for some of you, it's going to be very difficult for you to understand, because your brain is going to fight against you. You're not going to want to hear what I'm about to tell you. All right. And you're not going to see this anywhere else. I guarantee you, you will not hear this anywhere else. I promise you. And I'm going to show it to you and you're going to see it for yourself. Are you ready? Let's get in. All right. So I'm going to read something to you, which is factual. All right. But then I'm going to give you the truth. Are you ready? All right. Here's the facts. All right. Here we go. Courtesy of IHS Mark. All right. Energy Vice President Roger Dewan. How did you end up with the negative oil price today? This happens when a physical futures contract finds no buyers close to or at expiry or expiration. All right. A physical contract such as the NYMEX WTI has a delivery point at Cushing, Oklahoma. All right. In this occurrence, we'll talk about the May futures contract. So people who hold the contract at the end of the trading window have to take physical delivery of the oil they bought on the futures market. This is very rare. It means that in the last few days of the futures trading cycle, which is tomorrow for this particular contract, speculative or paper futures positions start rolling over to the next contract. This is normally a pretty undramatic affair. What is happening today is trades or speculators who had brought the contract are finding themselves unable to resell it and have no storage booked to get delivered the crude, okay, in Cushing, Oklahoma, where the delivery is specified in the contract. This means that all the storage in Cushing, Oklahoma, all right, Cushing, Oklahoma, is booked, and there is no price they can pay to store it. Or they are totally inexperienced in this game and are caught holding a contract they did not understand the full physical aspect of as the time clock expires. The contract roll and liquidity crunch that made the extreme sell-off today possible, but it doesn't necessarily represent futures market conditions. NYMEX June contract settled today at $21.13. The June contract is not out of the woods either. Today's action indicate that physical oil markets at Cushing are not in good shape and that storage is getting very full. Global stock builds are tracking in line with our expected supply demand imbalances. All right. A decline of over 15% in the June contract price points to real worries that the physical stress will continue to reverberate and will force a lot more production shutdowns during May than the ones announced so far. Global capacity to absorb the surplus will shrink as local constraints are sequentially met. And then there's a graph. It shows South Africa, India, Brazil, China, Germany, France, Canada, Netherlands, Korea, Japan, and the US. Okay. And the source of that is Goldman Sachs Global Investment Research. So today, negative prices are the reflection of dire market conditions for producers, with the hope that demand restarts before the middle of May and that the June contract does not face the same fate. Dun, dun, dun. All right. What you have just heard, ladies and gentlemen, was straight up facts. All right. You heard some facts. But now here's the real question. Although what you heard is factual, it was not the truth. What? Yes. I read to you an article that had some facts stated in it, but it was nowhere near close to the truth. All right. What do I mean by that? All right. Here we go. This is where you're going to really need to put on your big boy pants, your big girl pants. This is where you're really going to need to pay attention to what I'm about to say to you. For some of you, this is going to be totally new. Everything I'm going to say is totally new information. For those who've been with me for a while, some of this will be repetitive for you, but just hang in there with me. All right. So at one point today, the May futures contract got as low as $11. By the close of the day, it was down negative 30 something dollars, $34, $35. Literally, it settled literally negative $35. I'm not kidding. Okay. For you to understand this, you're going to need to understand a little bit of background first. I just can't go right in and give you, the in the nutshell, because you're going to need to understand some background first in order to truly understand what happened today. All right. So when it comes to commodity futures instruments are derivatives. Okay. They are leveraged. The leveraged is built into the contracts. Okay. For those that don't know, I got my Wall Street start in the commodity futures industry. I was a licensed broker. I had a Series 3. All right. Registered associated person with the National Futures Association, better known as the NFA, under the guise of the CFTC. Okay. Had to take a gut-wrenchingly exhausting, diabolically difficult exam in order to get that license. I know people who were doctors, lawyers, economists, accountants who failed that exam, just to let you know how incredibly hard the exam is. Now, the Series 7, some would argue, was harder only because there was a larger body of information that you could be tested on. By comparison, the Series 7 is twice as long as the Series 3, but the Series 3 is twice as hard as the Series 7. One of the hardest parts of the Series 3 is the section on basis. That took me forever to try to get. All right, it was rough, man. So anyway, it's technical, it's complicated, it's hard. Take my word for it. So anyway, the commodity futures industry, like I said, you're dealing with derivatives. You're dealing with growers of commodities. You're dealing with manufacturers of commodities, resellers. You're dealing with all these different entities. And the speculator comes in between them and provides liquidity. All right. That's what that's about. Okay. Now, historically speaking, all right, commodity futures contracts tend to be volatile. Okay. A lot of the contracts tend to be thinly traded, meaning that you don't have the type of daily volume and open interest as you do like with equities or forex. All right. Where billions of shares exchange hands on Wall Street every day and trillions of dollars exchange hands on the forex markets every day. Well, in commodity futures, you're lucky to get 5,000 people, trade hands every day, 5,000 contracts. All right, if you're lucky. All right. So with that being said, technically speaking, all right, technically speaking, it's supposed to theoretically be impossible for something to go to zero, especially in the commodity futures markets. Nothing ever goes to zero because it's a commodity, it's a futures contract. All right. Futures contracts automatically have leverage built into them. Also, they take into consideration interest and storage costs as well, all right, to store and house said commodity. So technically speaking, it is impossible for a commodity to go to zero because by its very nature, it being a commodity, it will never be zero. I like how Tom Sowell said it. How's he describe it? Rare resources that have alternative uses. All right. That's a quote from Tom Sowell. We're talking about rare resources that have alternative uses. So by the very nature of a resource being rare or limited, it has alternative uses. So it's never going to be zero. All right. Food is never going to be zero because you have to eat. It's always going to retain value because it's a commodity. Corn is a commodity. Wheat is a commodity. It's not going to ever be zero or worthless. All right. Because corn and wheat, all right, are scarce resources that have alternative uses. So therefore, they have intrinsic value built into them. Okay? By their very nature, they have intrinsic value. Silver has intrinsic value. Gold has intrinsic value. These are scarce resources that have alternative uses. You can eat corn or you can shove it in your gas tank and drive your car with it. Okay? That's what that's about. All right. So now we laid that foundation. Okay. So again, what is our definition? We're talking about the commodities market. We're talking about scarce resources with alternative uses, all of which have what is called intrinsic value. They're worth something no matter what the economy is. The whole world can be in a depression, but an ear of corn will still be valuable and have alternative uses. Okay. So by its very nature, a commodity cannot go to zero. Otherwise, it's not a commodity. You know what I'm saying? So it's not going to be zero. The only time that we have had a default type of a thing with a commodity, and that's why there's not a commodities contract on everything. And if my memory serves me correctly, it was on eggs. Okay. There's no egg futures market anymore, and it never will be because that market blew up back in the day. That's before my time. According to the history, they were basically dropping the eggs at the steps of the U.S. Capitol building. All right. So they're not dealing with that as a commodities market anymore. So by its nature, these commodity futures contracts, they do move up and down. If they don't move, trust and believe they will be taken away. And if they don't move correctly, they will be taken away. All right. So you can't have a commodity futures contract on everything. You can have it on some things, but you can't have it on everything. That's why there's not a futures contract on chocolate chip cookies. There's no chocolate chip cookie market. Okay. So you have it on your staples. So anyway, with that being said, what happened then with the crude oil thing? Okay, I read you the article. I gave you the facts, but I didn't give you the truth, and neither did that article. But I'm about to give it to you right now. Please understand what I'm about to say to you. Okay. You've heard me tell you throughout the years that I've been on social media that crude oil is the most gangster market on the planet. And I mean in every aspect of that word. Gangster market in every way. Gangster. Okay. Now don't get it twisted. Before my time, of course, the trading pits, the commodity trading pits were legendary for fist fights breaking out. Okay. But in the oil market, it's totally different. It's gangster because the market is political, you guys. Okay. It's not like the grain pits. All right. Or the live cattle pit. It's not like that. It's not like that at all. It's a whole different world. The people that are in that pit, in those trading pits, are a different group of people. They're not like all the other people in all the other trading pits back in the day. Totally different people, not the same people. You've heard me tell you the story. For those of you who haven't heard it, I'll repeat it again now. I recall me and my colleagues trading these energy contracts. We were trading crude oil, natural gas, and unleaded gas. Okay, we were trading these. We were not only just trading the futures contracts, but we were trading the options. We were going into the options market. I recall this very clearly, as this is if it happened yesterday, that we had placed some call options in the market. We're betting that the prices were going to get a temporary shock or rally, if you will. We were correct. All right. And the market did shoot up. And we had put in orders to take profit on these call options. We watched the market trade through our price. All right. I'm here to tell you, to this day, I still have not gotten a fill on that trade. We waited and we waited. Nothing happened. We picked up the phone. We called down to the trading desk, called down to the trading floor. It said, "What's up? Where is my money?" I see the market traded through my price, not just once or twice, but multiple times. All right. Where is my money? Then we watched as the market traded and crashed into the close. I'm here to tell you, we did not get out of the market. Do you know what the what they said to us on the trading floor, not only were they rude and obnoxious, but they hung up on us. They hung the phone up on us. Like, and they was like, what are you gonna do about it? All right. Nah, it wasn't Scott. Nah, Mark, you don't remember? It wasn't Scott. It was the guys down on the floor. Remember? They called down to the floor and was like, "What's up?" And we told them what's up, and they was like, "Nah." They was like, "No, we don't have a feel for you. What do you want me to tell you?" And we're like, "Yeah, but we saw, we were looking at the time of sales. Remember that?" And he was like, "Nah." He was like, there's no feel for you. I don't know what you want me to tell you." And they hung up the phone because he transferred me, and they hung the phone up on me, and we were just in shock. I don't. Where's my feel? They're the most gangster market on the planet. Yeah, Scott was cool, Mark. He was cool. He was cool. I remember Scott. He was real cool. But no, it was a dude that he got on the phone. I will never forget it. He put a dude on the phone. He was like, "Look, man, dude said you ain't getting it." So we was like, "Man, whatever." They dissed the mess out of us, man. Totally, we couldn't get a fill. Now, for those of you who have traded anything, notice I didn't say invest, I said trade. You know that when the market trades through your price, you're supposed to get a fill, especially if you're trading a market that does not have like a million orders sitting at your price that beat you to it. All right. It's usually first in, first out. It's not what happened. It's not what happened. We got dissed. We didn't get an order. They refused to give us a fill. They refused to get us out. And we had to eat it. That's how gangster the market was. All right. And still is to this day. I say all that to say this. What you guys don't know what's going on behind the scenes right now. All right. I can't quote the source on this. All right. So you're just going to have to take my word for it. You got to trust me. All right. I got this on good information, really good information. That's all I can tell you. What's going on right now overseas? Okay. What the U.S. is doing is they are trying to literally take over. They want to take over the entire Middle Eastern oil trade. Now, let me explain to you what I mean by take over. Okay. So you've been hearing it on the news lately that the U.S. is like becoming the number one oil producer in the world, right? The number one seller of oil. Okay. Let me explain to you how they're doing that and why they're able to say that. Because what you're thinking when you hear it, oh, wow, okay, Texas must be on and popping. We got a lot of oil flowing out of Texas. You go, Texas. No, Texas has nothing to do with it. What has happened, or how I like to say, what happened was we have gone over there. Remember a while back, I was doing a few videos on the crude oil when Saudi Arabia was in the news and the price was falling and they were talking about some stuff going on over there. And I explained to you guys that they're lowering the price of the crude oil to hurt Saudi Arabia and to get them toward the brink of bankruptcy. Do y'all remember that? Do you remember how in the news it was saying that Saudi Arabia was literally in the process of about to go bankrupt? Okay, here's what happened. They kept, lowering the price at the exchange level, right? Bringing down the price of crude oil to hurt their margins to make it so that they had to deal with the central bank. The central bank wanted more of a control share in the Saudi oil. Okay. And the only way to do that was they wanted a restructuring within the Saudi government. Now, around this time, you do recall that for the first time in Saudi Arabia history, they started electing their leadership outside of the cultural norms. Remember how they picked the cousin over the son and all that to run the country? Well, that was the USA meddling into foreign affairs because they wanted to have a bigger share, a bigger controlling aspect in the Saudi oil. All right. Now you may say, "Oh, I don't believe that. You're making that up." Am I? Okay. Well, then here's something for you. Sorry, I had to take my medicine. Okay. A few years later, after this happened, what do we have? The world's largest IPO in history, Saudi Aramco. That's right. The central bank came up in there and they nationalized it, per se, quote unquote, by putting it on the world stage as a corporation. They corporatized all of Saudi Arabia's oil, literally, under the umbrella of Saudi Aramco, whom the Saudis do not control. The US controls it. And they used USA, Wall Street power groups to get the deal done because that's what they do. All right. For those of you who are out of the loop, just take a breath, take a deep breath, because I know that knocked the wind out of you. That came out of left field. You wasn't expecting that. And you're not going to hear that anywhere else. I guarantee you. What I just said to you, you're not going to hear it anywhere else. All right. It doesn't end there, though. This is where it gets really wicked. Stay with me. All right. We're going to experience some rough seas here for the next 5 minutes. All right. So they come in. They nationalize the Saudi oil. They build the Saudi Aramco with the U.S. with controlling interest in it. And now they own a bigger stake and share of what's going over in the Mideast with that oil. Now you're talking about Syria. Okay. So they want to, now they have their sights set on Syria so they can do that. Because again, they want bigger share. The reason why they're beefing with Iran is because Iran refuses to agree to the same deal that Saudi Arabia was forced into agreeing with, because the U.S. threatened Saudi Arabia with bankruptcy. They threatened not only to continue to lower the price like we had going on today, back then, they were going to do what you saw today back then, and that would have just bankrupted the nation. Saudi Arabia cried uncle, just like I told you they were going to do at that time. And they agreed. And then here we are today with Saudi Aramco. Now, Iran refused to play ball. Iran is not down with it. Iran is like the last holdout. There is no central bank in Iran. Therefore, Iran is still under U.S. sanctions. And they knew that they just couldn't come out and say, well, you know, world, UN, here's what's happening. Iran doesn't want to let us control their oil and take their natural resources, so they're not our friend anymore. They have been laughed out of the UN. So what did they have to do? They had to create and pick a fight with them under the banner of terrorism. So they say, yeah, all this terrorism that we've been experiencing, you know what? It's not just Saudi Arabia that did it to us. It's also Iran. So they could have an excuse to go in there and take Iran's oil. But Iran said, no, we're willing to fight and do whatever it takes. We're prepared to die for this. All right. So then the U.S. had to come up with another idea. So now they say, okay, well, fine. We can at least tap into one of the main arteries by way of Syria. All right. So this has been an attempt to roll up the Middle East. Okay. This is where we are. All right. Rick, you just made a good point. I didn't get there yet, but I was going there. Well, you just said Syria, where Damascus falls for good, then the next level of horror begins. Okay. I was going there. I'm going in that direction because we do know, unfortunately, ladies and gentlemen, Damascus does become a ruinous heap. War is going to break out in Syria, and it is going to be catastrophic, ending with Damascus becoming a ruinous heap. That is literally in the scriptures, part of the eschatology end time prophecies that is yet to come to pass, but it will here in the near future. I'm sorry to say that it's also part of the plan, folks. So, with that being said, where we are now, what happened today was again another political ploy to frighten and scare the holdout, aka Iran and others, that if you don't do as we say, we will take this crude oil down to zero. Basically, it'll be trading at a buck, and we'll keep it there as long as we want to. Now, for those of you who doubt what I'm saying to you and say, "Oh, the government, the U.S. would never do that," well, let me just take you back, because now you're suffering. I know you're suffering. You're suffering with short-term memory loss. So let me help you. Have you forgotten what happened in 2008, the year Obama was running for office? They used crude oil again as a political tactic to stare votes from the Republican side to the Democratic side. Because don't forget, Obama wasn't president yet. Bush was still in office. All right? And they had to make you fed up with the Republicans. Because remember, under his watch, crude oil went to $150 a barrel. And that lasted well into August. All right? When it became clear that Obama was going to be the shoe-in, they let the price fall back down. And it literally fell from $150 a barrel down to $30 a barrel. This happened in 2008. Wow, how people have short-term memory loss. All right, so here we go. The reason why the U.S. is steadily saying they're quickly becoming the world's largest producer of oil is because they're counting their manipulation. They're counting Saudi oil, foreign oil, not oil that's produced here in the States. Okay, enough of the history lesson. Let's dig into what happened today. Today, you've been hearing all over the mainstream media how the reason why the crude oil price went to 30 something dollars negative is because there is such an overcapacity of oil. The world is flush with oil. Oh, it's dripping everywhere. We just ran out of places to store it. Oh my goodness. Oh my goodness. Oh, that's what you heard all over the news today, right? Right? Now I'm about to show you and blow the whole thing up. You ready? During the president's press conference, like he's been doing every day that we've been under the COVID-19 martial law, okay, medical martial law. Today, you heard them say that we are now going to build, what was it, 20 billion barrels of oil, something crazy like that, in an oil reserve, 20 million, something. I know the number 20 was put out there. But the person who they brought to talk about it was none other than a general. They marched out a military dude, an army man, to talk about this whole emergency reserve and how the president was enacting the Military Production Powers Act, okay, so they can shore up a whole bunch of barrels of oil because it's an emergency. And the puppet media and the puppet so-called news reporters in the room just sat there like, and they were oohing and ahhing. Oh wow! Oh, this, you guys are so smart. You're so on it. You guys, you got it together so much. Oh wow! Ooh, it, everything that they just saw went right over their heads. First of all, what does the military have to do with oil? Can we just deal with that elephant in the room? What does an army man, a general, have to do stand there behind the podium talking to you about oil? Since when does the military have anything to do with natural resources, with commodity products, commodity futures contracts, to be more specific? What in the world does that have to do with anything? The president should have been talking to the people about that, not a military man. What's the military good for? Guns, guns and bombs, protecting borders. Okay? He has nothing to do with global trade. Why are you showing military force and a national president? Come on, man. Open your eyes, people. They paraded him there for you to let you know that we're about to go to war. We're going to war. A real war. Not no fake Gulf War. A real war. We're going to war. And why are we going to war? We're going to war over oil. Every war that we've been fighting for the last 20 years has been over oil. The central banks want to control every natural resource on the planet. And you know what? They already have. Oil is the last holdout. They already own all the natural resources on the planet, folks. It's the central banks. You better understand this. It's the Federal Reserve. Universal basic income. Where do you think that idea came from? It's the Federal Reserve. It's the central banks. They want you to be their slaves, and they want to pay you a pittance to stay home and not work, not be productive, because we're going into a new age where it's not about produce. It's about control. It's about control. They're building the control grid right in front of your face. It's about physical control where they can watch your every move in real time with video and sound. All of your smart devices will be snitching on you and spying on you and reporting back. Did you not know that? Oh, you thought that Siri was just a cool little gadget to have in your house. But have you not noticed that it can turn itself on whenever it wants? It listens to what you say and reports back. It doesn't just give you information, it's reporting the information that it's giving you over to its masters so that they know what you're doing. They know what website you're going to, they know where you shop, they know everything about you. And you gave it to them because you went on Facebook and told the whole world everything about your life. And you even helped them by connecting all the people to your life. You connected them on Facebook with photos. You tell everything about your life on social media. They're tracking you, not just now in real time, but they've backtracked you all the way back to your birth. Everything about you. They know who all your relatives are, your best friends, everything, because it's right there on social media. Every time you go to the bathroom and take a fart, you post it on social media and they know about it. And right when you're about to flush the toilet, you get a chime on your smartphone saying, "Did you just take a poop? Did you know that now we have new toilet paper that's even softer for your buttocks? It's on sale now. Oh, and by the way, the store is right down the street from you. It's only 5 minutes away." That's right. They're spying on you, they're listening to you, and they're watching you. All right? This is where we are going. Now, you and I both know never in the history of the commodities exchange has a commodity futures contract ever gone negative anything or even go to zero. That is impossible. We're talking about something that has intrinsic value. It can never be worthless. It can be worth less, as in worth less than it was yesterday, but it's never going to be worthless, worth nothing. Okay? So, with that being said, looking at this chart of crude oil right here, this is the truth. I gave you the facts in the article, but here's the truth in the chart. All right? What they did was on purpose to bring attention to what they were about to do. They're trying to scare those individuals overseas, the last holdouts. They're showing you their power. They were war flexing muscles, pounding the war drums. You got this general telling you how they're going to stock crude oil. But how are you going to stock oil when you just said in the article that all of the storage facilities are at capacity? So where are you putting it? They contradicted themselves on live TV. They just told you that the reason why the oil went negative is because we have a glut of it and we have so much that we're basically just going to start dumping it in the ocean. But then 5 minutes later, they say, "Oh, by the way, we need to build up some stockpiles." And oh, by the way, yeah, we're gonna build our oil reserve. But you just said it's at capacity 5 minutes earlier. What are you talking? What are you saying? You guys got to listen to what they're telling you, man. They're lying to you. Okay, now I'm going to end it with the diabolical reason that it went to negative today. Are you ready? They drove the price down to that ridiculous level so that they could go in and buy up more of the natural resources and place a corner in the market. They basically cornered the futures market live on TV today. But it wasn't done by the Hunt brothers. It was done by your U.S. government via the central banks. The central banks controlled and took over the market today and showed you they could do whatever they want. So they drive the market to zero and go in and buy up tens of thousands of barrels on the cheap. If we already had an oil reserve, why are you buying more oil? Why are you setting aside more oil? If you have so much oil, it don't make any sense. That's like me being invited to your house for dinner. We're sitting there, we're stuffing our faces. All right, we can't eat another lick. We sitting there burping and farting at the table. Can't eat another lick. Right? We gotta loosen our belt so our stomach can pop out. Okay, we feel miserable, and then all of a sudden, I say, you know what? Can you bake me a cake? I want some cake. Well, hold on. You just said a minute ago that you were stuffed and you couldn't eat another lick, but now you want some cake. Oh, and by the way, can you throw some pie in there and get me some Rocky Road ice cream too while you're in there? You don't make any sense. It's either you're stuffed and you can't take anymore, or you're lying. Which one is it? Okay. All right. Now let's talk about and deal with this stimulus. Mark, you bring up a good point. The negative thing to offset the stimulus. Well, here's the thing. Everybody knows that from a economical standpoint, cheap energy is a boon. It's a shot in the arm to you and I. All right, it is that's a stimulus in and of itself. All right, if I only have to pay 50 cents a gallon at the gas pump, that's a blessing to me, regardless of my financial status. Whether I'm middle class, upper middle class, rich, poor, that is a shot in the arm to me if I am paying 50 cents a gallon for my gas when just a month ago you paying almost $3 a gallon. So that is a blessing. That is a stimulus. But again, this negative price had nothing to do with us. It was about them. It was about their power base and them cornering and showing that they could do whatever they want to with this market as long as they want to, just like they did in 2008. It is a political gangster market. And that's what they're showing you. They control the markets. Like I said to you this morning, they control the markets. All right. The markets are not manipulated any longer, guys. So people need to stop saying that. The markets are not manipulated. The markets are controlled. There is a difference. Manipulation is when you do something to try to further an ends. You're trying to supersede a process. I'm telling you, there is no process. It is a controlled mechanism. The markets have been connected and controlled. They are controlled. They literally move with a harmonization of a musical note. The markets are connected and they move in a flow, in a musical pattern. They move in a pattern. They are controlled. They're no longer manipulated. They are controlled. There is a difference. There is a difference. If they want to tonight, they can take this crude oil to $300 a barrel. And then they can come up with an elaborate story to explain it to you tomorrow. And they'll spend all day and all the different channels and media outlets explaining to you from whatever perspective they want why the price went from negative to $300 a barrel and why this is a good thing. Exactly. Remember, this is the same banking system that told you that lower prices were good for the economy. And then they turned around and told you that higher prices are bad for the economy. But then in the same summer, they turned around and gave you the case why lower prices are now bad for the economy. That's right. This is the same media that you call authoritative, telling you two different things in the same mouth at the same time. They're saying on one hand, lower prices are great for the consumer. On the other hand, they're bad for the consumer. And people say, yup, each time. Cheap gas prices are bad for the economy. Yeah, it sure is. Cheap gas prices are great for the economy. It sure is. He just told you two different things at the same time, and you said yes to both of them. That's how they do you. They play mind games and word games to get you to believe whatever narrative they want so that you can agree to what they're about to do to you. All right? I hope you guys are hearing what I'm saying to you. I hope you are hearing what I am saying to you guys. This is a game. All right? It's not rigged. It's not manipulated. It's controlled. There is a difference. There's a big difference. It's controlled. All right? These mechanisms are controlled. The last 2 weeks, I've been showing you charts. Have you not noticed that the charts look the same regardless of the market I was showing you? I showed you mad charts, and each one was looking the same. It didn't matter if it was a crypto. It didn't matter if it was a stock. It didn't matter if it was a commodity futures contract. It didn't matter if it was forex. It didn't matter. They all were the same. I hope you guys were paying attention when I was explaining that to you. The charts were identical. It didn't matter what the market was. How do you think that is? It's because it's controlled. That's why you cannot win, because they control everything. And because you don't know that they control everything, you always find yourself on the losing end. And that's why they've now closed the door. They've closed you in. You're locked in the room. You can't move. You tried to run over to equities and you got smoked. You ran over to real estate, you got smoked. You ran over to the bond market, you got smoked. You ran over the precious metals, you got smoked. You ran over the Bitcoin and altcoins and got smoked. Where else are you going to run to? There is nowhere else for you to go. If you want to get out of this room, if you want to be on the winning end of this Dark Souls video game that we call the world global economic system, you got to understand how to play the game. This is Dark Souls, people. This ain't no Mario Brothers. This is Dark Souls. All right? There's no hand holding. There's no remorse, no sympathy, and no pity. It is Dark Souls. All right? Hardest game on the planet. This is Dark Souls meets Bloodborne all rolled into one. All right? And you're being thrown into the deep end of it and expecting to swim or drown. And, oh, by the way, while you're in there, they're going to try to make sure that you drown because they're going to attack you while you're in the water. That's right. Okay? Now, how can you beat them at their own game? It's simple. All you have to do is know the pattern. If you want to beat Dark Souls / Bloodborne economy, you got to know how to play the game. Know that each individual big boss that you're coming up against has a certain move set. They're going to attack you at different points in different ways. All right. So the equity big boss, the bond big boss, the real estate big boss, the precious metal big boss, and then your crypto big boss. Okay. You have to know how each big boss moves. You need to understand what was the thinking behind the programmer's mind when he designed each one of these big bosses. And each one, if you notice, is different, and it kind of seems to get harder as you go. All right, so this is how it is controlled. Okay. Now, I hear you, Raymond, but it's not fake. It's very much real. Unlike the video game Dark Souls and Bloodborne, you don't get a do-over. All right, if you die, that's it. You're not coming back. Okay, this is very much real. A lot of people say, "Oh, it's this is the fake market." Oh, no, it's very real. Okay, and you're gonna have to deal with it, and you're gonna have to understand how to navigate it. All right, they're using very sophisticated algorithms, and they're using it against you. All right, let me give you another example real quick, and I'll end it. The algorithmic approach that I use in the PulseWave price trigger reports can pretty much be used across the economy. My wife and I, we used to do a thing where we could determine on particular some stores when they were going to have a sale and how they were going to do the sale. As a matter of fact, if some of you have had issues at some of these higher end stores, I apologize. It's probably because of my wife and I that they enacted these rules. We figured out how we could go and we could get the expensive, nice coat on sale. We determined exactly how much of a sale it was going to be, and we determined at what price and how expensive the coat was going to be. But here's the catch. Because of the supply and demand at these higher end stores and stuff, if you didn't get the coat now, you pretty much weren't going to get it. They only made these sales to get people to come into the store, but it was like a bait switch. You would come in looking for that coat, but that coat's gone. That coat been gone. All right, so you see sales for other things. So here's the catch, though. I figured out how the pricing was going to go and when it was going to go, and so we would go in and we would get the coat because we knew if we didn't get it now, that it wasn't going to be here later when it was on 90% off. So what we would do is we go in, we get the coat, and then every week that the price drops, we would go back and get the difference, because they had a rule in place that if you bought something and it went on sale, you could come back to the store and they would pay you the difference in cash. And so we kept coming back every week until the price bottomed out. So not only did we end up getting the coat for the absolute bottom price, but we were one of the few people that actually not only got the coat, but literally paid that price for the coat. All right. We did that at multiple stores, different types of stores. I even did it with a car one time that I bought. There is an algorithm. I don't know how to really explain it to you guys, but there is an algorithm that is used across the economy, you guys. All right. And they use it. It's a pricing model. It's not too different from the one that they use during the financial crisis of 2008 with the housing crisis. All right. It's pretty much the same type. It's almost like a betting system. But anyway, you can determine if something is a price, has a price associated to it, you can literally run this analysis on it and know where it's going. It's hard to explain in words. It's hard for me to quantify for you in words, but just take my word for it when I'm telling you it can be done. It can be done. All right, it can be done. I'm not talking about like counting cards and blackjack and all that stuff, or poker odds. I'm not talking about that stuff. Betting odds. I'm not talking about that. I'm talking about something totally different. I'm talking about the technology that is in place today that they use to price out everything. Most people don't know that there is a subset of technology that is connected. Everything that where there is a price associated with it runs off of this system. I know. I warned you at the beginning of this broadcast that it was going to get deep. All right. I told you that. I warned you. I said it's going to be hard for you to wrap your head around stuff. Why do you think I told you guys to get out of the May contract early? And why did I said, what else did I say? Come on, y'all. You got to remember, no short-term memory loss. What did I tell you about the way the prices were moving and how the activity is going? I said, something is not right. I don't like it. It's not right. They're about to do something. Remember that? And right before they did this, the signs were already there that the price thing was coming. Do you guys remember the first oil play that I gave you that one morning? I said, I'm looking at this right here because look how this is priced in relation to all the other oil ETFs. Remember that? And I got in there, unbeknownst to me, though, that this thing was about to go off the board. Y'all remember that? And one of you guys in the trade room was like, yo, Dex, you see this? And I was like, oh, shoot, I didn't know the thing was going to go off the board. So then I found another one that it was priced. It was oddly priced. And someone else sent me another thing and said, well, this is going off the board too. And I was like, oh my. And that did it for me right then and there. And then remember, I got into the OIH. It was $3 a share. Remember, I said, you know what, guys? This thing ain't been moving right. I showed you the chart. I compared it side by side. I said, here's the crude oil futures. Here's USO. Here's the crude oil futures. I showed you that, remember? And then I did the same thing with the Dow. I said, here's the Dow. Here's the DXD. And I showed you all that stuff. I said, here's Dig. Here's Doug. Right? And I told you, I said, look what they're doing to JNUG. Look what they're doing to JDST. And look, I said, it's the same thing that happens with these 3X ETFs. Remember, I said that. I warned y'all. I said something don't feel right. The way the prices are moving is not right. And I said, I know, I feel it. They're about to do the reverse split and raise the price again. And sure enough, here we are today. OIH is trading at the $90 handle when just a week ago it was at $3. Right? I told you, I said it's not right. They were already preparing to take the crude oil contract into the negative. What they literally did to you today is the power of the algorithm. All they did was, a reverse split, but they did it in the futures this time. And they took it negative. The same way they take an ETF that's trading at $1 and then reprice it to $90. It's the same thing they did with the futures, but they did it inversely and took it negative. Now you think about that for a minute. All right. The power of the algorithm, people. All right. In closing, unbeknownst to a lot of people, nobody really technically got screwed in the crude oil play. Let me explain that to you. No, people aren't getting oil delivered at their door that they can't move. No. The majority of these futures contracts are non-deliverable. They have futures contracts they created that are non-deliverable. Doesn't matter what nobody say on the news. The contracts that are trading that are deliverable are still not being taken to delivery because you got to fill out hedging paperwork, blah, 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 ahead of time before you even open the account. All that has to be said that you are going to be taking delivery of all of your positions that you put on. Okay. All that's worked out ahead of time. None of that other stuff matters. All right. So thinking that somebody's going to get a tractor trailer, pulled up to their door, tanker truck of oil, and saying, where do you want me to put this? That's not happening. Okay. Anyone who's taking delivery is because they are a producer or manufacturer of that commodity and they need that commodity. Doesn't matter what the prices are doing right now. Doesn't matter. They need that commodity. Okay. So I just want to put that out there. All right. So where do we go from here? All right. They're setting you up. Let me explain it to you. Today was also a sign. Remember, I told you they like to do signs. They like to do mathematical signs in the market. They send signals to each other in the markets, and they do it with prices. A price represents a sign, symbol, or signal in the markets. Just like it did on 9/11, the week after they opened the market, the S&P 500, the E-mini S&P 500 dropped to 921 and then reversed instantly and rallied and closed green that day. I will never forget it. 921 is where it fell to. All right. Then they did it again in 2009. The S&P 500 contract went to 666 and reversed on a dime instantly. Today, crude oil futures closed down negative 30 something. That was a sign. And it came on the back of they had already reversed your OIH. They already had done that. That was already a done deal. If they reversed it, it's now in the 80 handle. Do you think they did that so they could drop oil now, drop the OIH back to $3 over the next couple of weeks? No, ma'am, no, sir. They did it to price you people out of the market. It's going to be harder for you to buy and trade OIH at $90 a share than it was when it was trading at $9 a share. Are y'all tracking with me? Okay. This is a game, people. And you can play it and do it successfully if you understand the algorithm and the way the price mechanisms are structured. Okay. The next one on the block that is going to experience this is USO and UCO. USO and UCO right now are trading at $3 and $1 respectively. I do not ever remember a time when USO was trading at about $1.35. I do not remember USO being at $3.75, but right now they are, and tomorrow morning they could very well be trading at $90 a piece. Oh, you think they're gonna keep this price at $1 so you can go in there and buy 1,000, 2,000, 5,000, 10,000 shares? And then have it naturally go to $90 and make you a multimillionaire? No, ma'am, no, sir. This thing is about to get repriced, and that way you won't be able to participate. See what I'm saying? See how they roll you out? See how they do you? All right. So if they don't reprice these two, that means they're planning to erase those as well. Whatever they don't reverse split, they're gonna get rid of. It's just how it is because it's too cheap. And if oil prices keep falling, these things will go to zero. So either they're gonna get rid of these USO and UCO, or they're gonna reverse split those next two. And by the end of the week, they'll be trading at $80, $90 a piece. So that is what that is. Okay. All right. So we've done there. We've done it. All right. Let's wrap this up. Going into silver now. Here is your good old silver. All right, still struggling with that trend line resistance. Can't get up to save its life. It is just struggling. They're sitting on it. You know, they're making silver have a heart attack. All right, there you go. Boom. You say they opened a bid of $1 on the USO? I don't see that, but you're probably right. But I'm prepared for anything on that one. All right, here's your corn. Just falling, just getting smoked. All right, because and here's the thing: the dollar powered up again. That's why you see your commodities getting smoked. Look at this corn, just falling, you guys. Like it's just falling. Here's the next thing. Look at here's a better chart of your silver. Just can't get up over that trend line resistance. even though we got a primary rally alert for tomorrow. Maybe it'll make one more push tonight into tomorrow and get a nice close above that trend line. We'll see. All right, looking at now gold. All right, gold is maintaining, all right, above the trend line support and above the Kumo cloud, but your trend line still ain't out of that Kumo cloud on your algo chart. We're going to need that to happen. We got a primary rally alert for tonight into tomorrow for gold as well. And we got the beginning stages of a bearish weekly trend momentum and an official correction. Technically speaking, today on the algo chart, gold has now officially entered into correction mode, meaning that we will be seeing lower prices. All right, so that's what we are on that. Sorry I had to break it to you. All right, here's your Dow. Here's what happened with the Dow. We got a primary crash alert for tonight into tomorrow in the Dow futures. This one's getting tricky because you got this resistance here and the overhead resistance being at the bottom of the Kumo cloud, but you got a positive weekly trend momentum. We'll see which one rules out. All right, taking a look now at the Russell futures. Same thing, primary crash alert for tonight into tomorrow. This overhead resistance is pretty powerful at the moment and the beginning stages of a bearish weekly trend momentum for the Russell. All right, not looking good at all. Taking a look here at the NASDAQ 100, primary crash alert for that too. We're above the trend line and we're above the Kumo cloud and we got bullish weekly trend momentum and we got bullish momentum. So is the algorithm picking up something early over the next 3 to 5 days? We shall see. Will we be getting some sort of a drastic drop in the stock market? We will see. Taking a look at the Litecoin on the crypto side. All right, we do have now the cash out. Primary rally, primary crash. We got the trend range now established. For the rest of the week, market should trade in between this trading range here. These 3 bars. Going nowhere in the Litecoin. Looking at Ethereum. Ethereum has a primary crash alert, but it's happening above the Kumo cloud. This overhead resistance being at the bottom of the Kumo cloud is a problem. And we got the beginning of the bullish weekly trend momentum. Can it be enough to push the prices higher? We will see. Technically speaking, though, we got this primary crash alert right after this primary rally alert. Looks like we have a trading range established for the week. I'm expecting sideways prices to last over the next couple of days in the Ethereum. Take a look now at Bitcoin. Okay, so Bitcoin 2, we got the ticking time bomb going on, bullish weekly trend momentum, but we got the trading range established. I'm expecting sideways prices over the next couple of days, trading within this trading range here as established in this bar. Taking a look now at the pound sterling. On the forex side, here's your primary crash alert. We're now 3 bars in, but we're still below the trend line resistance, and we got the beginning of a bearish weekly trend momentum. I'm expecting sideways to possibly lower prices on this one too over the next couple of days. All right, taking a look here at the euro dollar. Euro dollar has bearish weekly trend momentum. We're well below the Kumo cloud, well below the overhead trend line resistance, and we're coming off of a secondary crash alert, and we're in a correction. I see lower prices coming for the euro over the next couple of days. Taking a look at the Canadian dollar, it's already in correction. It's looking like we may be putting a short-term bottom. We got bullish weekly trend momentum going on here, and we're coming off of this primary rally alert, but we haven't broken out yet. Will the market be able to get enough behind it to push forward, or are we going to continue to drift and then test trend line support? That's what we'll be watching over the next 24 hours. Taking a look at bonds, ticker TLT, positive rally alert. positive weekly trend momentum. We got a bear market though signal. We got a primary crash alert. We're right on top of this Kumo cloud. We are north of the trend line support, but that trend line is starting to get inside of that cloud. So this one could be sideways to slightly lower too. We'll have to watch these bonds. Just keep in mind too, the Fed is in these bonds. So they're going to do what they can to keep it afloat. We'll see if they can manage. All right, here is wheat. Wheat really surged today. But remember what I told you this morning when I heard that? I said wheat is one of those markets that can consolidate and trade in wide ranges for an extended length of time. Well, all we've done today, if you take a look at this high, all we did was respect the bar here. That's all we did. We just came back to this old trading range. We just re-entered it right here. That's all we did. We re-entered the old trading range before the market broke down. That's all we did today. Nothing to see here, folks. Sounded good with it being up the way it was, but we're still in a consolidation. All right. We went down, then we went up, then we went down. Now we're on our way back up again. That's all you're seeing here. Wheat might as well be the S&P 500. You can just get in here and just trade the swings. Not hard. Sell here, buy here, sell here, buy here. That's what the system's been doing for you. And if you trade wheat, you've been having a good time with the system. Here's the S&P 500. All right. We got all consolidated up in here. Now the market's trying to start moving again. Primary crash alert. Keep an eye open for the S&P 500 over the next day or two. And that's all I got for now. Okay, I see a couple of requests. Let me go ahead and see what I can do for you here. And then we'll wrap it up. All right, let's see here. Okay. UCO. And you want to see BNB. Is BNB on my list? I don't remember what's on the list no more. Let's see here. Is BNB on the list? I'm sure it is. I just can't remember right now. So BNB, it's down here. Okay. Yep, here it is. Okay. All right, I got you. All right, we'll do these and then that's it. All right, so taking a look at BNB, we got a primary crash alert, and we're under the auspices of the bullish weekly trend momentum. We're trading below the Kumo cloud though, and dropping below the trend line support. But this right here is crazy action. I don't know if these are bad ticks or what, but right now the momentum is up, but you're still in an overall bearish configuration, but you're not trending. You got the ticking time bomb. As far as I'm concerned, it looks like you just established a very wide trading range that you're going to be in for a very extended period of time for the foreseeable future. So looks like you're going nowhere in BNB. All right, taking a look at UCO. You're dirt cheap. You're trading at a buck, and you got this gap up here you never even closed and filled. Either this is going off the board or this is the next candidate that they're going to reverse and put all the way back up here, $80, $90 or something a share. So nothing to really see here. All right. Boeing. All right. You want to see Boeing? All right. Let's see what we got on Boeing. All right. So you want us to go into the military industrial complex. All right. Let's see what we got. I know I got something here for you. Let me see. Hold on. Give me a second. All right. Here we go. All right. What saith the algos on the military industrial complex? All right. So we got this gap back up in here that we got from March that has not been filled yet. You've been moving sideways, not a lot of action here. You're stuck in a consolidation below the Kumo cloud. ticking time bomb, absolutely flat momentum. You're going nowhere. You're stuck in this. You're stuck in this consolidation pattern. It's a wide pattern. It goes from $90 all the way up to like $190, which is crazy. So you're basically in a $100 trading range where you're just going sideways, nothing happening. All right, let's see. Get out of this. All right, let's see what you got. All right. All right, MRO, Marathon Oil. Is that what MRO is? Red? Is MRO Marathon Oil? Is that what you want? Let me know real quick. Is that it? Go ahead and type that in the live chat for me. Make sure I'm pulling up the right thing. Because we got a couple here. We got Marathon Oil, Mill Rock Resources, Madagascar Oil on the pink sheets. So I will assume you want this one. All right, let's see what we got. All right, so we got ticking time bomb. This thing is flat, dead in the water. This thing ain't moving nowhere. You're just trading in the established trading range, and you've been doing it for weeks. Chicken time bomb, absolutely flatline momentum. This is another chart that's going nowhere for the foreseeable future. You're just in this trading range. It's stuck. It can't get out of. It's trading between $3.31 on the bottom and $5 on the top. Can't break out. It's just stuck, dead in the water. All right, folks, I got to roll. Thanks for hanging out with me, hearing me out. Hopefully you guys got a better understanding on today's activities, and you can see a little bit more clearly now what's really going on in the world that we live in, which is quite interesting at late. All right, I'll see the rest of y'all, man, in the trading room, and everyone else I see in the morning for our pre-market post scan. It won't be as lengthy because I got an appointment that I am going to have to get to. So we'll get it in and knock it out. All right. With that being said, folks, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And please, you need to go to pulsewavetrading.com and get on with these pulse waves so that you can benefit from what these central banks are doing. All right. I bring it to you, but it's up to y'all to take advantage of it. All right. Love you guys, man. Be encouraged. Peace, and I'm out.